All right, everyone, welcome back to the Nadlin Forum Podcast Daily. I'm Ruby, your resident Aussie and curious real estate nerd, sitting in with Lior as always. And Lior, can I just say, my group chats have been off the rails this week about mortgage rates. Did you see the news? Rates are moving. Like, honestly, my head's spinning. But turns out mortgage rates are basically unchanged, 6.29% and holding. What gives?
Yeah, it's funny, right? You read the headlines, you watch the markets, and you expect everything to jump. Bond markets had some shifts, but mortgage rates just didn't react this time. Usually, and I mean almost always, bond prices move and mortgage rates will follow. But this week, the market didn't play by the rules.
For real, it totally threw me. Like in Australia, I remember watching the news and panicking every time they said interest rates are up. I'd call my mum and convince myself nobody would ever buy a house again. Then, turns out, nothing much really changed. Is it the same circus here in the States? Or is there something different happening with how these rates get set?
It's pretty much the same game, but maybe with more noise in the American market. Bonds should set the tone, and they do, long term. But yeah, everyone's on edge because we're waiting to see what the Fed will do. This week, it's just calm. Even with all the drama in the headlines, the rate moved up by 0.02%. Nothing major. If you blinked, you missed it.
I mean, I did blink. I blinked 100 times and still nothing except more group chat panic. Okay, so I guess it's kind of like we're watching a reality show waiting for a twist, but the next episode might not air until the Fed talks next week. Is that basically where we're at?
That's exactly it. Everyone's waiting for the big reveal, but for now, we're all just sitting tight.
Speaking of twists, there's one that confused me completely. These rate headlines, half of them don't even line up with what brokers are seeing in real time. And it's all because of Freddie Mac's weekly survey. I looked into it, and it turns out their numbers are always lagging. Is that right?
Absolutely. You nailed it. Freddie Mac releases their average mortgage rates once a week, and they pull the data from Thursday to Wednesday. So any big drop, let's say there's a huge drop on a Friday, they don't catch that in the survey until the next Thursday. That messes with the headlines and creates a weird disconnect for anyone following the news.
That explains so much. So if you read about a rate drop last week, it was already old news. Nobody in the market actually locked those lower rates by the time they heard the news. I mean, it'd be like showing up to a garage sale after everything's been sold.
Exactly. And actually, I had a client recently. He saw the Freddie Mac rate drop and got super excited, waited for a great deal, and then by the time he got to his lender, rates had already ticked up. He missed the window just because he relied on the weekly report instead of looking in real time. Happens more than you'd think.
That's brutal. So it's really important if you're buying or refinancing right now, you gotta understand how the survey works. Don't just trust the headline. Check what's actually available with your lender now, or you'll end up chasing a rate ghost. Lior, I always mix up. Didn't we talk about this kind of delay with insurance data too a few episodes ago?
Yeah, good catch. Just like we said about insurance prices lagging disaster events, mortgage rates can lag real market moves. Always double check the timing.
All right, let's talk about the big plot twist that still hasn't dropped, the Fed's next move. Everyone's saying there's a 0.25% cut coming. But from what I've read, maybe I'm wrong about this, but it sounds like that's already baked in. Markets are more obsessed with what comes next, not the headline cut.
That's right, Ruby. The announcement itself, it matters, but the markets care way more about the Fed's future plans. The dot plot is basically the cheat sheet, shows where each Fed member thinks rates are headed over the next year or two. If they signal more cuts to 2025, that's where things get interesting for investors and buyers.
Okay, rapid fire for you, Lior. What should investors actually watch? Is it the inflation numbers, labor data, dot plot, all the above? Help me and our listeners not lose our minds here.
you kind of need the big picture. Inflation's still sticking around, so the Fed won't cut fast unless they really have to. Labor market, it's been soft, sure, but not panicking yet. So if the dot plot signals more cuts, then buyers and refinancers should keep their eyes peeled and move quickly if rates start falling. But don't bet your whole strategy on 1 week's headlines. Think long term, just like we keep saying on this show.
Makes sense. It's all about playing the long game, even if the group chats don't want to hear that. All right, that's going to do us for today. We'll have our ears glued to the Fed next week, obviously. But until then, thanks for tuning in to Nadlin Forum Podcast Daily. Leah, always good chatting, and don't let the headlines make you too crazy.
Thank you, Ruby. Looking forward to seeing what surprises the market brings next week. Thanks to everyone listening. See you all next episode.